All right, and we are live. What's going on, guys and gals? Good morning. Happy Wednesday. Hope you're doing good. I hope you're warm. I, for one, am not warm. We got a little more snow here in Massachusetts last night, so I was out there at 4 o'clock this morning getting my shoveling on. I've actually been awake since about 1 o'clock, so I'm just on a weird schedule right now. But sometimes waking up early, you might stumble across a good-looking squeeze, which we had here on the 15-minute for the futures. And even at 1 o'clock in the morning, that can turn to a good trade. So I whacked that 15-minute squeeze earlier. And now we're coming up on a pretty big level. So SPX 4900, the level of the day. But first things first, we had some earnings action last night. We had the big Netflix and chill. Netflix closes at $4.92. She gonna open at all the way up yonder at $5.40. $5.45 to be exact. So really big push. Does anyone remember the expected move? If you do, let me know in the chat. I'm not too sure what the expected move was. I've got to imagine they beat it. David says $40. So, all right, we're kind of in line. We're up a little bit more than the expected move. So everything going good for Netflix. Now, the funny thing, Netflix seems to get grouped up with the FANG stocks, the Mag 7. The interesting thing is Netflix is really not that important as far as the weighting goes. So here's your QQQ. Apple makes up 9%. Microsoft makes up 9%. Amazon makes up about 5%. Nvidia is about 4.5%. Meta is 4%. Tesla's 3%. Google's 2.5%. Netflix is all the way down here at 1.6%. Only 1.6% of the QQQ. So I don't think it's meaningful as a Google, a Microsoft, an Nvidia, or an Apple. But a 30, 40 point gap up in a strong market, it ain't going to hurt. Now, the only thing I'm bummed out about, and show of hands here, how many of you were already long Netflix? But for me, I've missed the bus. The bus is gonzo. What I was hoping for, and hope is not a strategy, but what I was hoping for was we'd open up flat today, and then we'd actually have a chance here to trade that daily squeeze. And the thing of it is, I'll show you the board here. Y'all know the combination I'm looking for. All right, everything's bullish. You've got multi-time frame alignment, and you've got a bunch of squeezes. So if we check out the money makers, there's no lack of strength. Everything except Tesla's really bullish. We've got perfect scores on the monthly chart, the weekly chart, the daily charts. Only issue for me, not too many fresh squeezes. Not too many weekly squeezes, not too many daily, 2-day, 3-day. We do have a lot of action down here. 15-minute, 30-minute hourly. But what I loved about Netflix was it grades out nicely. You've got a bunch of 8 out of 10s. You've got a few 10 out of 10s. And you've got some good squeeze action. Or I should say you had some good squeeze action. Slingshot squeezes on the daily chart in the 4-hour. Bull squeezes on the 2-hour, the 30-minute, and the 5-minute. So typically that's my favorite setup. I want to buy that near that 21 EMA. And then the target would have been 520. So she's a strong one. We're going to open up about $25 north of the target. So I have missed the Netflix bus. But I do think from here, any pullback, assuming price doesn't go back under 500, you might look for a spot to buy the dip. But I am a little bit too late for now. So kudos to anybody who caught Netflix, and then jump into the indices. Everything's as bullish as possible. Now, keep in mind, we can acknowledge that. Monthly charts might be perfect. The weekly time frame might be perfect. Take the S&Ps. From the monthly down to the 1 hour, you have a perfect score. Same thing for the QQQ. That doesn't mean things go up in a straight line. Always expect your pullbacks. Always expect some kind of back and forth, choppy consolidation. More importantly, don't fight this. You get a 15-minute sell signal, awesome. That 15-minute sell signal might trigger a pullback. Given the context of how strong things are, you probably buy that pullback, as opposed to trying to get short. Getting short is a little bit tough. So for today's session, we do have some decent 30-minute squeezes. S&P, QQQ, they've got the slingshot signal. So we're already getting a heads up that they might want to fire to the upside. And we've got the same thing here for the Dow. On the daily chart, you have slingshot squeezes on the RSP and the Dowski. And then slingshot squeezes on the monthly for the small caps and the RSP. For today, though, we'll shift over to the 30-minute. Actually, we'll start on the daily chart first. What you have here in the S&Ps, a really, really good example of that multi-time frame alignment. You start here on the daily time frame. It's perfect. Structure is bullish. Momentum is above 0. Big 3 score is a perfect 10 out of 10. You pop open the hood. You check the 4 hour. That's bullish. I'm checking out the 2 hour. That's bullish. 1 hour is bullish. 5-minute is bullish. The weekly is bullish. The monthly is bullish. Everything from head to toe. Alignment for a push higher. So what we're trying to chase is alignment plus squeezes. Everything lined up, everything firing on all cylinders, everything pointing towards the market wants to go higher. And then you try to throw a few squeezes into the mix. So to the bulls' benefit, that daily slingshot squeeze we were getting last week, that fired to the upside on Monday. Build up of energy, and now we're releasing the energy. So with that daily squeeze as the background, there's your backdrop. Then you take something like the 30-minute squeeze. Big 3 scores an 8 out of 10. It's in a 30-minute uptrend. And now we're getting the slingshot signals. This would be a different setup if the weekly chart was in a downtrend, if the daily squeeze just fired short. That 30-minute squeeze is in perfect alignment with every other time frame. And those are the kinds of squeezes you really want to focus on. So now the question from here is, can that 30-minute squeeze fire? And to spoil the surprise, it's pretty much going to fire at the open, or a pretty good chance it'll fire at the open. When and if it fires, does that open a door for a push towards 4,900? Which, of course, everyone and their mama and their mama's mama, they're all going to watch 4,900. It's the next big level. It's the next big sexy target. If you're already long, pay close attention to that 4,900 today. We might push into that level, and then who knows? We could blow through it, and then I think we're looking at a bigger short squeeze, or that might be a little spot for a break in the action. Caught a nice push yesterday. We're getting continuation of that push here at the open. That's going to leave our lower time frames a little bit overbought. So if you're at big resistance and your 15-minute, your 30-minute, your hourly are a little extended, there might be room for a dip. So I think really important for any of you who are long for the Friday expiration. You've got the QQQ calls for Friday, S&P calls for Friday. You got some NVIDIA, whatever the case may be. It's Wednesday, right? If we do pull into 4,900 and then things take a breather and we do pull back, just be mindful of that. Your calls could be up 200% this morning. But if they expire Friday and they're still out the money, you could end up with a big old goose egg. But that, I think, is the path for today and then potentially towards the end of the week. And if we do pull back a bit, I view that as a positive. Let things pull back. We'll look for a fresh 5-minute, 15-minute, 30-minute squeeze, and then we'll take it from there. And then the last thing I wanted to show you is just a few monthly charts, which I'm pretty sure we talked about on Monday. But of all the things you don't want to fight, like I'd rather see you fight Mike Tyson. I'd rather see you fight a wild grizzly bear. Fight anything other than a monthly squeeze. Fighting the monthly squeeze, not good for your health. And like I showed you guys and gals, that's been the case pretty much throughout the entire history of the market. If we go back to 1970, I think there's been 12 or 13 occasions where we had a squeeze and a buy signal. On only one of those occasions did we not get a huge push. So probabilities-wise, history would strongly suggest, though the daily charts might be a bit extended, though the weekly charts might be a bit extended, everything about the monthly chart says the party just started. The map of the monthly squeeze, we're right here. 2 months into the squeeze firing long. The S&Ps go another 1,300 points. All right, we are back here. S&Ps go another 500 points. And again, we can go all the way back through the early 2000s, 1990s, 1980s. You do not want to fight the monthly squeeze. Where this thing could actually heat up a little bit more, I think at least, is if the small caps can join the party. If you think about the stocks that have really been responsible for the push, and granted, we're getting better participation. So the financials look better. Things like healthcare looks better. But the better part of this push, it's been tech stocks and semis. The classics. It's been Old Faithful. Where that squeeze can really begin to heat up would be if everything else joined the party. Not so much a reliance just solely on Amazon and Google and NVIDIA, but if the IWM could pretty much pull the same move the S&Ps have pulled here, I think things get a lot more fun. So here's what we're working with. We've got the first monthly slingshot buy signal. Let me think. I think we got the first one on the SPX back in April. Yeah, we got the first one back here in April. So in the context of a monthly uptrend and in the context of a monthly squeeze, the IWM is pretty much right here. In an uptrend, pulled back into support. You got your squeeze. They broke momentum, but momentum found a bottom, and now it's on the up and up. That monthly slingshot signal for the S&Ps was pretty much your first heads up. And granted, it's a monthly chart, so we're not talking 2, 3, 4 weeks down the road. We're talking 2, 3, 4, 5, 6 months down the road. But that first blue arrow, that's your first heads up. The squeeze probably wants to go and turn higher. The blue arrow is your heads up. You're going to get the green arrow. The green arrow is the heads up. We should be pushing towards the upside target. So for the small caps here, the little fellas, if that signal can continue to progress, I think there's some of that same potential. In an uptrend, pulls back into support. They begin to print the squeeze. They break momentum. But it does look like it found a bottom. And man, they got that thing right up on the edge of crossing back above zero. Which would imply for the first time in over 2 years, the monthly chart for the IWM has finally got some gas in the tank. big breakouts, big trends can't happen with momentum below zero. So pretty much the pattern you had back here. And granted, that was COVID, so things got a little bit friskier. But what I really want you to notice, right, the world's going crazy. Everybody's locked up at home. We can't travel. We can't go see family members. We're dealing with a pandemic here, folks. Structure never broke. Structure meaning is the 21 EMA above the 50, is the 50 above the 200, is the 8 EMA above the 21 EMA, and then more importantly, the direction of the moving average. Is my 200 trending higher? Is my 50 trending higher? Is my 21 trending higher? So you'll notice we go through an entire pandemic. They crashed the price from 170 to, wow, that was gross, huh? From $1.70 down to 100. They take down momentum. Did they ever really break the structure? We just sat through a tornado. Is the house still standing? Is the foundation still solid? 200 never stopped trending higher. The 50 never stopped trending higher. 21 never crossed below the 50. So no, they never killed the structure. From there, guys, if momentum can just bottom and then begin to head back up towards zero, squeeze typically wants to go and fire long. So to a lesser degree, it's pretty much the same thing. Down comes price, down comes momentum. 200 still trending higher. 50 SMA still trending higher. 21 never really broke below the 50. And now momentum is on the up and up. The missing piece here, and again, that's your early heads up. The missing piece, momentum crossing back above zero. We get that, we're going to get a monthly buy signal. If we get a monthly buy signal, then like any other time frame, we're looking for about 240. You've got a squeeze, you've got a big 3 buy signal, everything lined up for a push towards 2.5 to about 3 ATR. And think of it, right? That's the smallest, that's the weakest, that is arguably the lamest index of them all. Nowhere near as big as the QQQ, nowhere near as big as the S&Ps, not as cool as the Dow Jones. It's the small caps, or as I call them, the small craps. There's nothing really that great in the IWM. QQQ is LeBron James. S&P is Michael Jordan. Dow Jones is Kobe Bryant. The IWM is me. I can't play too much defense. I'm not going to pass the ball too much. I might hit a 3. I'm good for hitting an open 3. Now imagine if I can begin to play up to the level of Michael and Kobe and LeBron. Then we've got a really good team. It's already a good team with just Kobe, Mike, and LeBron. If I can get that good, we got a better team. So if that basketball analogy makes any sense, this won't happen quickly. I don't imagine, but definitely keep an eye on that. If they can't even take down the small craps, we probably got more upside. If the small craps can join the party, you hold on tight. Okay, so there is that. And then real quick here, same thing on the RSP. And this actually gives you, I think, the most, call it realistic view of the market. S&P 500 on an equal weighted basis. So Google is just as important as Caterpillar. If that can fire to the upside, and right now everything indicates it wants to, stronger market, more fun to the upside. Alrighty, so we talked Netflix, we talked the 30-minute squeezes for today. We talked SPX 4900. We took a look at a few monthly squeezes. And then for open trades on our end, we did take profits on Google on on Monday. We took the paycheck on Monday. We bought our debit spreads for about $1.30. I got filled on the exit at $2.70. I think a few of the folks in the mastery got out for $3. So either which way, it was a nice trade. But it was a trade that did require a lot of patience. We're buying those debit spreads back here. And 1 week goes by, 2 weeks goes by, 4, 5, 10, 12, 13 weeks goes by. Finally got the push. And now, if earnings wasn't next week or a couple of weeks away, I've really got no reason to close the trade. I wanted 150. We got pretty close. But more importantly, the weekly squeeze still hasn't fired. So there's the benefit of a good entry. If you can buy it near the 21, you might catch your push. You might take your profits. Squeeze still hasn't fired. Now I've got some cash to my name. Google pulls back a bit. I find a good spot for an entry. I can take those profits and turn it into a brand new trade. So that's going to be the game plan here. The bigger question is, do we get a spot for another entry before earnings? And then, frankly, considering how close earnings is, we'd have to position size that to accept 0 if we are, in fact, going to hold through earnings. But in a world where earnings is not next week, I still think the best weekly squeeze in the market. It was NVIDIA. NVIDIA did have the crown, but the squeeze fired. So now the crown belongs to Google. And then as far as NVIDIA goes, we're going to open up around 603. We're pretty much riding the wave at this point. I would like a pullback. I would love a chance to buy some more. But otherwise, the squeeze fired 3 weeks ago. You got a big old breakout. We're looking for a move deep into 600, 650. So we took our first trade back here. First trade paid for trade number 2. Trade number 2 is the March expiration 600, 610 debit spread. Meaning I'm going to make the most money as we approach March if NVIDIA is well above that 600, 610. And I think there's a pretty good chance. If we do get a pullback, so long as price isn't going back under 505, which I think is a little bit unlikely, but crazier things have happened. Any pullback above that 505, I want to buy that dip and I want to look for continuation higher. A good rule of thumb, squeeze fires, you tend to get anywhere from 5 to 8 to 10 bars of momentum. We're only 3 bars in. Granted, a little bit extended. So I don't really think you want to be in the business of initiating your swing trades all the way up here. But a nice squeeze, a good breakout. Try to catch her on a pullback. So yeah, we're out of Google for now. We are long NVIDIA. And then we're still holding our Tesla trade. And this is our second trade on Tesla. So technically it's a free trade. But it's also a dead trade at this point. We call that dead money. We've got the March expiration 300, 310 debit spread. Meaning I only need an $80 rally between now and March for this to turn into a very nice trade. The structure and the signals would suggest you probably don't bank on an $80 move. It's the only thing on the board on the moneymakers that has a negative score. Only one negative on the weekly. Only one on the daily, the 4 hour, the 1 hour, the 30, the 15 minute. Time frames we've never even heard of. It's probably negative there as well. So frankly, as far as with that being said, there's no reason to look for a trade here in Tesla, in my opinion. If I'm going to buy something, if I'm going to get long, would it ever really make logical sense to buy Tesla before I buy more Nvidia? Would it make sense to buy Tesla before I buy some more Google or some Apple or some Netflix or pretty much everything else on this watch list? Probabilities wise, it wouldn't make sense. All these other names, perfect alignment for a push higher. Tesla's got alignment for a big dip lower. I don't want to fight that. I do not want to fight that. But all right, beautiful people, that is what I got for you. That's my story, and I am sticking to it. So, any questions, anything you want to take a look at, any chart requests, perhaps you want to see something on the big three watch list, throw them on over and I'll see what you got. I'm getting really, really close to the point where I think I'm going to start to post all my futures trades as alerts. My only problem right now is discipline, which I'm happy to be transparent about because I don't think I'm unique in that I struggle sometimes with discipline. What I've noticed when it comes to my futures trading, I have this tendency to always want to be in a trade. Like I get a little bit uncomfortable if I'm sitting there in cash. And that's really freaking stupid. If you just sit back and think about it. Even on a day trade basis, does it actually make sense that you would be long or short at any given time? Is every minute of every day really an A plus moment in time? No, that's a pipe dream. Not going to happen in this market. Not going to happen in any market. So it's no different than my swing trade. Like I'm going to sit here, I'm going to wait, and then give me an Nvidia weekly squeeze. Now I've got something to work with. A plus setup, good entry, very good risk reward. For a swing trade, I can't ask for much more. So that level of discipline to sit there for 1, 2, 3, 4, 5, 6+ weeks, waiting for an A plus swing trade, I've got to tighten things up a little bit on my futures trading. But if anything, to show you an example of an A plus setup, and we were looking at this yesterday in my mastery in the options room. All night, all morning, all afternoon, you got the S&P futures just chopping here in a big hourly squeeze. Now, the benefit of finding that squeeze, we already know, based on what we know about the squeeze, the futures are fixing to bust a move. We don't quite know if it'll be long. We don't quite know if it'll be short. But we do know eventually the squeeze will fire. And typically that's going to lead to a nice push. But I want you to see the alignment that came through in the later afternoon. Right around, ironically, right when I went to the gym with my wife. Awful timing. Hourly squeeze, slingshot buy signal. Did I have good alignment for my 30-minute? I can't do too much of that 1 hour if the 30-minute is lagging behind. 30-minute, slingshot squeeze, and then quickly fires long and flips bullish. All right, now that 30-minute squeeze, it's on the same page as the hourly squeeze. What about your 15-minute? $15-minute, squeeze and a buy signal. What about my 5-minute? What I'm trying to show you is that you get nothing of benefit from the hourly squeeze, until the 5 minute, and then the 15, and then the 30, until everybody's on the same page. All right, where is the 5 minute? 5 minute was back here. You found an hourly squeeze. You ran that through the X-ray machine. 30-minute chart aligned for a push higher with a squeeze. 15-minute aligned for a push higher with a squeeze. 5-minute aligned for a push higher with a squeeze. I'm sorry. There's the 5 minute from yesterday. That's my day trade. Risk reward wise, if I can find that moment in time above the hourly 21, check this out. All right, the 50 SMA was right there. So if you're buying it, say here, the entire thinking is I'm timing this trade so that I buy the futures and the squeeze fires long. Not 2 days later, not a week later, but like I'm talking right here, right now. If I buy it here, I'm taking it off under the hourly 50. We will never see an hourly squeeze fire long if price is below the 21 and the 50. At that point, I've got no reason to sit in the trade. And at that point, my 5 minutes probably not perfect. My 15-minute may no longer be perfect. Just say you're trading the futures. You buy it at 48.85. I'm saying you got about $5, maybe $6 of risk. That nested squeeze, right, first comes the 5, then the 15, then the 30, then the hourly. That took you a good, put it this way, from that hourly squeeze, here we are a good $40+ higher. You do not need a good win rate if you can risk $5 to catch 40, 50. You don't need to bat 90%, 80%, 70%, 60%. You don't even have to bat 50%. But the key is waiting for that moment in time. That can lead to a good win rate. And when I look at my futures trading, it's just clear as day. I have a really good win rate when I'm patient. I watch my YouTube, I'm playing Tetris, and I wait for that squeeze and that alignment. Because of my entries and my exits, it's a great combination. High probability of working. If it doesn't work, not going to be a big deal. If it does work, it's a big, we're looking at 2, 3, 4, 5x the potential loss. So discipline, that's that tis the tricky part. And then for the futures here, 49.30 pretty much lines up with 4,900 on the SPX. So big level for the SPX is 4,900. Big level for the futures is 49.30. We'll see if they can't punch through. But all right, guys, we got about 10 minutes here, so I'll get caught up in the chat, see what you got for questions, and then another day of living the dream. Okay, Claudia, awesome question. So we want to be long stocks that grade out really well. We want to be long the 8s, the 9s, the 10s. But then we also want to make sure that we're taking advantage of the easy part of the move. If we tie it all back to a squeeze, I think the easy part of the move is the push from that 21 EMA into the upside target. So now we got Netflix here, or NVIDIA rather. Squeeze already fired. We're already up here at the target. Right? The label says target hit, but it's got a perfect score. Right? Structure is still perfect. Everything's still lined up. That doesn't mean I want to blindly continue to buy NVIDIA. What that means is I want to buy NVIDIA when I've got a good risk reward, which essentially is never going to be up here at these extensions. So a really, really good question, Claudia. The perfect trade is we have a big squeeze. The scoreboard is super bullish, right? Every time frame gets a really good report card. And we're selling those put spreads, we're buying those calls right near that 21. That combination can lead to exactly what NVIDIA has done. Bunch of good scores, you got a big squeeze. That all takes you to the target. Now we're at the target, and even though it's still a perfect 10 out of 10, the easy part of the push, it's very likely we've already seen that. So as far as a fresh idea, a brand new trade, that's where you step back a little bit, you wait for a pullback, and ideally wait for a bigger squeeze. Now, for our sake, Claudia, where we're going to have a little bit more flexibility is because we're rolling out our profits. So if you think of when we opened up our second trade on NVIDIA, if that was a brand new trade for us, meaning we weren't already long NVIDIA, we're not playing with profits, it's a brand new trade, pretty good chance we wouldn't have opened it up there. So if you are playing with profits, you can be a little bit more flexible. But very, very good question. All right, Chaz. Good morning, Chaz. ASML. All right. What does the almighty board got to say? It's not an ASML thing. It's just the market. Very bullish. A lot of really good scores. My only gripe would be, how can I trade it? I can see clearly everything's bullish. How can I express my edge? Where's my trade? Where's my setup? The only thing missing here is a fresh squeeze. If I'm thinking swing trade, I'm looking for a weekly, a 3-day, 2-day daily. If I'm thinking day trade, maybe a bit shorter term, give me a 1 hour, 30, 15. But right now, a lot of names look like ASML, which is pretty much just an object in motion staying in motion. Everything's bullish, everything's strong. So strong, in fact, we're not pulling back and going sideways long enough to get a brand new daily, 4 hour, or any squeeze for that matter. So it's a little bit like an AMD. AMD is really bullish, but across your bigger time frames, a lack of squeezage. So what I think you do with a name like this, especially all the way up here, and it looks like earnings are okay. Earnings are this morning, so that might change everything. Holy crap! Yeah, wowza. Okay, so that's gonna open at 8:24. Wowee. Everything I said will still be the same though. Very strong, just no squeezes. At 8:24, we're going to be about 6 average true range moves above that 21 EMA. Very strong, very strong. All right, guys, a few more here. Caterpillar. Meow. We are getting the slingshot buy signal off the daily squeeze. So let's go check over here. Caterpillar's in pretty good standing. Perfect monthly, perfect weekly. Very nice daily chart and a slingshot squeeze. So that points towards potentially, if everything can develop, 300 to about 305. Crude oil. Crude's a toughie. Crude's a toughie because you have this daily squeeze. They're trying to fix momentum. They're trying to fix the structure. But you've got that big brick wall. up there at that daily 200, which might be a little tough to break through. So the way I would approach crude, I would look for a long, but I'd be very quick to take my profits at that 78-ish. So there's your resistance until proven wrong. The 21 EMA is your launching pad for the crude oil rocket. The trigger for the push could typically come from something like a 30-minute or an hourly squeeze, especially if they got a buy signal. And you've got that on the hourly. So you could try to take your really good-looking lower time frames and then play for a push up into that daily 200. And then you take it from there. Good morning, Laura. Laura's got some MPC. Very choppy, but it has a lot of squeezes, which tells us that at some point in the future, we should get a move here. The one thing I don't love, and this might be me being a bit too much of a fan of my own indicator, but I don't like all the false signals. Oh, we're going to break out. Nope, just kidding. We're going to break short. Change my mind. We're going to break out. Actually, I think we'll break short. We'll break out. We'll break out. We'll break out. And we're not getting too much more than a bunch of chop. But the squeezes won't squeeze forever. They will indeed fire to the upside. Let's see, earnings. You know, Laura, what it might take is earnings. Earnings might be the catalyst to finally get MPC out of this big box it's stuck in. For what it's worth, though, things do lean bullish. So I don't think I'd be trying to short it, that's for sure. But like a lot of things out there, Netflix, Tesla, you do get a lot more clarity after earnings. Sometimes for the better, sometimes for the worst. All right, guys, I'll do a few more here and then I'll let you go. Let me check YouTube, see if you got any chart requests over here. And actually, let's just, before I do that, make sure I'm not going to go over anybody's time in here. Let me just check the schedule. Simpler Essentials breakout room. Whoa, we are getting alerts here. Okay, Allison's on at 11:30. We got time. Okay, so SPX opens 48.90. So we are $9 away from the big one. The one and only, the almighty 4,900. And just to be clear, everything's really bullish, but we have to pick our spots wisely. So just a few things to consider. We're gapping up. We're gapping up under what should be a really key level. And we're doing that while our lower time frames are pretty extended. The hourly chart is well above that 3 ATR. And this is just all probabilities based. Any given day, the market's going to do exactly what it wants to do. But as we're making our business decisions, we got to base those on probabilities. So probabilities-wise, not all that often will you gap above plus 3 ATR. and then continue to push and push and push. Now, today might be that day. But if anything, at least be mindful of that. We are well above 3 on the hourly. We are well above that +3 on the 30-minute. I'd imagine every lower time frame. Yeah, 15-minute. The 5-minute way up there. So typically on a gap up, you want to look for a pullback into a lower time frame 21 EMA. Tricky thing is, on a 5-minute, that 21 EMA is $30 lower. And I wouldn't bank on a $30 pullback. I mean, believe it or not, today is a good morning to watch the 1-minute. That's only a $20 pullback. All right, I don't know of a lower time frame. So typically on a gap up morning, the first pullback to a 1-minute or a 2-minute or a 5-minute 21 EMA, you learn a little bit about the market. Are we going to gap and crap? Or are we going to gap, pull back a bit, hold support, and then keep pushing higher? That gets a little bit more complicated when you're that far above even a 1-minute 21 EMA. Dare I say it, I might have to whip out the old 15-second time frame. But take that picture of risk reward. If I buy the S&Ps right now, my target is 4,900. I've got maybe $9 to my benefit. The more important question, what's my downside? Risk reward wise, I can't even wait for a pullback to a 1-minute 21. Or let me reword that. I can't sit through a pullback to a 1-minute 21. At that point, my risk reward is it's ass backwards. I might make 10, or I might sit here and take $20 on the chin. Well, at that point, guys, I'm going to need that 90% win rate. And I don't want to have to make a living on a 90% win rate. So these mornings are definitely tough. Everything's green, everything's bullish. Anybody who was already long is jumping for joy. Let's check the board here. ASML's up 8. All right, futures, or the indices. $30-minute squeezes all fired long. So those have gone bye-bye. Let me check the big boys. Even Tesla's green. Even Tesla. All right, our NVIDIA is up a tad. Netflix is up a whopping 12%. Not too shabby. Meta looking good. But you can see we only have lower time frame squeezes. Great for a day trade. Great for an overnight kind of trade. For a 2 to 4 week swing trade, I really like that daily, weekly squeeze. Amazon, Meta, and then we'll put the ticks over here, and we'll do a little bit more Q&A, and then I gotta go finish shoveling. Also, a really important morning to watch the internals. If you're gonna watch one, just watch the ticks. We've gapped up. Every lower time frame known to mankind is overbought. We're only $9 away from what should be a really big level. And the ticks opened at positive 1,500. There is a chance the bulls have kind of shot their momentum load, and that might be it. If the ticks pull back to 0 and they're under 0, be very careful buying into this pop. Vice versa, We can be at plus 300 ATR. If we got good structure, we got buy signals. The ticks are at 900, positive 1,000. Market go and do what the market want to do. Just check NVIDIA. All right, we'll finish up the Q&A here. See Netflix. Netflix waits for nobody. The one that got away. Carlo, the slingshot signal has been released. So if you have the indicators, just check your email. If you have the big three squeeze, that is, check your email. Anders looking for Google 160. Anders, I think you mentioned last night the that 520 level on the SPY. If you're looking for 520, my friend, I am fully on board with all that. I can get down with another 20, 30 bucks of upside. Does Eli Lilly look good? Lilly does look good. I would say Lilly is quite the pretty gal. Show you here on the board. Yeah, ticks are strong. And if I at all sound like I want to see the market pull back, that's because I do. I want to get long from lower. Lily Bell. Lily's been really clean. Yeah, really, really good stuff. The monthly, weekly, and the daily charts are perfect. 4 hour, 1 hour, get an 8. Really good stuff. More importantly, you got some really good squeezes. The star of the show being the weekly squeeze. And I think they have earnings. Let me see. Earnings are next week. No, you've got a few weeks here. Putting earnings aside, the weekly squeeze points towards 680 to 700. So yes, Lilly does look very good. And then good morning, James. Anybody watching Cisco? The disco at Cisco. Let's take a peek. All right, guys, low of day here on the ticks. Let's see if they test 0. Cisco grades out nicely. My only gripe, the only bigger time frame squeeze we have is a monthly chart. And they can just take their sweet time. Which, depending on your time frame, might not even be a problem. It is a brand new signal, though. The assumption would be, so long as they print the slingshot signal, this might unfold exactly like it did back here. Down comes price, down goes momentum. They're not breaking structure. Momentum turns a corner, you get the blue arrow, you eventually get the green arrow, you eventually get the breakout to your target. So the map of the mall, we are right here. In a squeeze, brand new slingshot signal. Month by month, you kind of take it from there. Where there's usually a better chance the squeeze will fire sooner rather than later would be if there was also a weekly squeeze, a daily squeeze, something nested inside of it. All right, ticks down to positive 200. Pull up the futures here, or the market rather. It's not even so much that price has to pull back into a 21 EMA. it's a little bit more that price has to touch the 21 EMA. So that can happen in one of two ways. One, we do pull back, we get the reversion to the mean, or it could be a bit more of we gap up and we're going sideways, we're going sideways, we're going sideways. If we can trade sideways long enough, that gives that 21 EMA enough time to come on up and meet back up with the price. Price will smooch that 21. You are no longer extended. Then you can take it from there. But we got a lot of daylight left, so we will find out. Tron, what does the slingshot indicate? So SPX monthly chart, a really good example. Arguably the best example. Slingshot meaning they pulled back on the price. They pulled back on momentum. But then kind of like a bow and arrow or a slingshot, everything then goes snap. Right back quickly in the opposite direction. Price goes down. Momentum goes down. They never impact the structure of the chart. In other words, in that moment in time, everything feels bearish, but nothing all that bearish is really happening. We're not getting a 21 under the 50 cross. We're not getting that 50 SMA turning and trending lower. Nothing really happened. So slingshot means you sat through a big, nasty momentum cycle. Structure remained perfect. And now momentum is making that turn back towards positive. Slingshot's early heads up. Squeeze wants to turn the corner and fire to the upside. But all right, y'all, I'm going to let you go here. I'm going to go shovel for my wife. It's just the kind of guy I am. Make sure the car's all cleaned off. And then let me think today's schedule. For those of you in the options room, I'll be on the mic at 11:30 Central. And then for my good people in the mastery, I'll be live with y'all tomorrow at 10:30 Central. And then we'll be live again on Saturday morning. A little bit of weekend prep. But all right, gang, kind of a quick recap here. Very strong market. Everything bullish, everything looking good. Does not mean you want to be diligent in picking your spots wisely. So for today's session, we've gapped up. We are a stone's throw from a really big level. Lower time frames are mucho extendo. Mucho extendo. If anything, practice the patience to just wait for a test of the 1 minute 21. And we're almost there, right? We're almost there. Maybe price pulls back to a 1 minute 21 and the buyers come in, we turn the corner, and that was your generational buying opportunity. Or they can't hold that 2 minute 21 or the 1 minute. It breaks. And from there, you pretty much just play process of elimination. If they can't hold the 1 minute 21, next up in line is the 2 minute. 2 minute 21 all the way down here. If they can't hold the 2 minute, 3 minute, 5 minute, 15 minute, so on and so on. But all right, my friends, good session this morning. It went by pretty quick, but we put in, let me see. We put in a good hour of work. I'm here for it, and I'm glad you're here for it. So as always, thank you for your time. Much appreciated. I wish you all the best of luck today. Be safe, be disciplined, stay warm, and I will see y'all for the next prep session on Monday morning. Oh, before I forget, Friday afternoon in the Essentials room, I'll be on the mic for a full walkthrough of slingshot signals. So definitely be there for that. But all right, y'all, adios.